I'm Pastor Aaron Harris, and this video is all about understanding risk tolerance so that you can come up with smart investment strategies for your financial future. If you don't know what risk tolerance is, or you don't know what your personal risk tolerance level is, then stick around for this video and I'll tell you all about it. Let's start off with understanding what is risk tolerance. Breaking down the word risk when applied to investments just means how much risk is in a certain investment. If you make this investment, how much risk is there involved? Meaning, how much potential is there for you to lose your money? And then tolerance is how much tolerance do you have to take risks? Some people have a low tolerance for risk, which mean they want to do investments that are really not risky at all. And some people have a really high tolerance for risk, which means they can do investments that are really risky. So in this video, we're going to find out what your specific risk tolerance level is. Everyone wants to gain money, but no one wants to lose money. And so if you know an investment will gain money and not lose money, then you'll say, oh, I'm definitely going to invest in that. For example, if someone said, hey, if you invest $10 with me today, next year I'll give you $100 guaranteed. Many people will say, wow, that's a great return on investment. That's 10 times the money that I gave you. And they will jump on that and do it in a heartbeat. The only problem is they do not talk about the risk that is involved. Instead, they say it's guaranteed. But no investment is guaranteed. You have some that are low risk, but there's no such thing as a no risk investment because each investment carries around a certain amount of risk. Next, let's talk about why risk tolerance is so important. Risk tolerance and ROI goes hand in hand together. ROI is your return on investment. How much money can you expect to make from your investment? How much return do you get from the money that you invested? In addition to knowing your return on investment, you should know the risk that is on that investment. For example, if someone said, if you give me $10 today, in 1 year, I will give you $100, then that sounds like a great return on your investment. But if they said there's only an 80% chance that you'll get your money back and there's a 20% chance that you'll completely lose your money, then you start understanding that there's a little risk involved. And if they flipped it around and said there's only a 20% chance that you receive your money and there's an 80% chance that you lose all of your money, then you would say, I do not want to make that investment because the risk is too large. What wise investors do is they look at their ROI, their return on investment, and they compare that with their risk tolerance to be able to make an informed decision about whether or not they should make a certain investment. All investments can be considered either low risk, moderately risky, or high risk. Low risk investments are things like bonds, CDs, which are certificates of deposits, money market funds, money market accounts, high yield savings accounts, and many more. What all of these low risk investments have in common is you usually are able to get about 2 to 6% interest on them, 2% being at the low end, 6% being at the very high end. And the reason that it's good to invest in these low risk investments is because they're able to help you combat inflation. Usually we have inflation, and what inflation does is it erodes your money. It makes your dollar not worth as much as it was a few years ago. That's why everything continually goes up in price. And so if you're looking for low risk investments, the good thing is they have a higher guarantee, which means you're most likely going to get paid when you invest in them, but they also do not have a high return. So that is the pros and cons of low risk investments. Moderate risk investments are things like index funds and mutual funds. Index funds are great because they have very low fees associated with them, and you don't have anyone that directly manages the account for you. Mutual funds also have low fees as well. They're a little bit higher than index fund, but they're a lot cheaper than having someone manage your finances for you. These moderate risk investments usually get between 6 and 12% ROI, or return on your investment. And this is really good for anyone who is planning on retiring, or you are saving for a long period of time. And this is really one of the best ways for you to build a significant amount of money. It's just to continually to invest in something like an index fund or a mutual fund, which carries a little bit of risk but not a ton of risk, and it also gives you a good return on investment at the same time. High risk investments are usually things like individual stocks, day trading, cryptocurrency, and starting your own business. These things have the potential to make 12 plus percent annually, almost an unlimited amount of money that you can make, but they also carry a very high risk. What that means is, yes, you can invest $1,000 and your $1,000 can potentially grow to $100,000 if you invest in a high risk investment, but at the same time, your $1,000 can easily go down to $0. And so if you have a high risk tolerance, then what that means is, yes, your money may increase drastically, but it could also decrease just as fast. So usually the recommendation is that people put small portions of the amount of money that they have, like 10% of the money that they have, they will invest it into high risk investments, and the other money that they have, they will put it in moderate or low risk investments so that they do not lose the money that they built. Usually, the younger you are, the higher risk you can take, and the older you are, the lower risk you want to take. Because when you're younger, you're focused on building wealth, and when you're older, you're focused on sustaining the wealth that you have. So, where is your risk tolerance level? Do you have a low risk tolerance level where you want to go and invest in low risk investments where you get about 2 to 6% return on your investment, which really is not that high when you factor in how much inflation is every year? Or do you have a moderate risk level or moderate risk tolerance where you want to invest in index fund and mutual funds, and you want to diversify your portfolio and get about 6 to 12% return on your investments, because you know that index funds and mutual funds, they go up and down, but they go up a lot more than they go down. And as long as you're invested for a long period of time, then your money should be good in one of those funds. Or do you have a high risk tolerance where you say, hey, I'm going to go for it all. I'm going to try to make as much money as I can. If you do that, just know you run the potential of losing everything that you have. But some people have a high risk tolerance level and they say, hey, high risk, high reward, and they go after it. So let me know in the comments what your risk level is, and watch watch my next videos, as what I'll do is I'll have a whole video that goes more in depth about low risk investments, a whole video that goes in depth about moderate risk investments, and I'll have a whole video dedicated to high risk investments. So watch those videos and let me know what you think.